Good day, ladies and gentlemen. So today I want to refresh your memory on a very powerful strategy I taught you some time ago, and it has to do with a combination of extreme liquidity level and candlestick patterns. So extreme liquidity level and candlestick patterns. For those that don't know what liquidity is simply a level above or below which you have a lot of stop losses. It could be support and resistance levels, it could be turning points. You understand? You always have stop losses in the region, okay? And this is the underground secret why sometimes you take a sell trade, for example, the market actually goes to your stop loss and then continues in the direction of the sell trade, okay? So generally market is engineered to go to these liquidity levels. So the way you can beat that, okay, is for you to combine the liquidity level with candlestick pattern. So instead of getting in a position where after you place your stop loss, the big banks and the big institutions just move the market to go towards your stop loss, tap you out, and then still move in your direction, it's very painful. So this strategy will help you avoid that. I've explained it before, but I want to refresh your memory, by analyzing current data, with this particular strategy. And in case you did not get it the first time, this is an opportunity for you to actually get it, okay? So I need my horizontal line. Okay, starting from here, this is where the day started. Today is 25th of March 2024. Okay, so definitely you are going to have liquidity resting below these supports. Let me circle the region. Okay, this support area right here, you are going to have liquidity under this place because people that entered buy trade, okay, they will place their stop loss here. Okay, so you put an horizontal line here. You can do it for the for resistance level and support level. So once you master it, you'll be able to do it in both ways. So definitely you will surely find trades to take. Okay, so the idea is once the liquidity has been swept, market will want to move in the opposite direction. Okay, so if the liquidity is swept below, market will want to move above. Okay, if you want to move up, if the liquidity is swept above, market will want to move down. So how are we going to enter the trade? We enter the trade after we see a candlestick pattern, as simple as that. So you have to combine. So this is a support. I will be waiting for market to come and tap this liquidity level out. Definitely let me copy and have another this thing. So above this level also, this is like a resistance because it's like a turning point right here. There will be liquidity above that. So this movement went above that level. Okay, let me see if I can zoom in a bit. Okay, so this candles tapped out the liquidity, but we don't have any candlestick pattern around here telling us the market wants to go down. Okay, so this level that tapped out the liquidity will become the new liquidity level. Can you see I've adjusted it? I adjusted it to what's it called, to go above the wick there, okay, of this level, because it's now my new liquidity level. It didn't give me any what's it called, candlestick pattern around that region after tapping out this liquidity here. Okay, so I'm not going to enter my trade yet. Instead, I'll shift my line to mark out the new liquidity level. And what happened? Market came back to tap out that liquidity. So that liquidity is taken out now. So we'll be looking out for candlestick patterns that will tell us the market will go down. Remember, I said market always moves in the opposite direction of the liquidity it swept. Okay, but you have to wait for a candlestick pattern to confirm it before you enter. So let's see if there's a candlestick pattern. Yes, there's a candlestick pattern. Hope you can see these reverse candles, reverse armors rather. These are reverse armors forming. Okay, this looks like a doji telling us that something is about to happen. Okay, but it's a big body doji. Okay, so you can see all of that coming in. Definitely you can enter after this big bullish candle. So this is actually the sign I saw, that reverse armor. Okay, that is a candlestick pattern. So from there you'll be looking to enter a sell trade, because once liquidity is taking a particular direction, like I said, market will move in the opposite direction. Even you could even enter after the reverse armor, but I would advise you to wait for some confirmation. Okay, so this big bullish candle is a confirmation that market wants to go down. If you entered at that point, your stop loss will be above that candle. Okay, so if you enter the close of that bullish candle, your SL stop loss will be just above that candle, and you target 1 to 2 risk to reward ratio, or you trail your stop. So let's see what happened. Market moved in the downwards direction. Okay, so do you see that? So basically that's how we use this system. So let's continue. This part, I think there's a kind of support here. So this is the liquidity level under right here, which was what? It was swept by this candle. You can see the wick of the candle. So that level becomes my new liquidity level, since there's no candlestick pattern telling me the market wants to go up. Like I said, you can do it for, towards the upside and towards the downside. It works in both ways. So this becomes my new liquidity level. And let's see if it's going to be tapped out. It's not tapped out yet. Not tapped out. Okay, it's tapped out here. You can see this red candle. The red candle broke that line. That's what I mean by tapped out. Red candle broke that line, so it has swept the liquidity there. So we wait to see if there's a candlestick pattern that will confirm towards the market is going up. There is no candlestick pattern yet, because this next bullish candle is not an engulfing candle. Okay, it's not an engulfing candle. It's not an hammer that will make us think that okay, market wants to go up, so we won't have entered this trade. In such a case, what you do is you move the liquidity level to the latest one. Do you understand? You move it to the latest one. This is my latest liquidity level now. Okay, so I'll be waiting for it to be tapped out. What happened? Okay, market did not come in that direction. Don't forget that in the same way I'm doing for the lower parts, I can also be doing for the upper parts also. Okay, so this level is my liquidity level now. Let's see if it's going to be tapped out. Yes, this candle tapped it out. Do you see that? So let's see if there's any candle stick pattern that will tell us the market wants to go down. Let's see. No, because the red candle that followed is what? The red candle that followed is not an engulfing, not engulf the other candle, so it's not a candlestick pattern telling me the market wants to go down. So what am I going to do? I'll shift my liquidity level to the latest one. I'll update it. Okay, so I would have definitely missed this trade. All right, I would have missed this trade. Though there's an engulfing candle here. Let me take it back. There's an engulfing candle right there. I just saw it now. So if this was your liquidity level and it got taken out right here, okay, though this candle did not did not give us a candlestick pattern, but a few candles that formed later gave us a candlestick pattern. Look at this. This is a bearish engulfing. This is a bearish engulfing candle telling me that market wants to go down. That's a bearish engulfing candle. Okay, even if you missed that one, you wouldn't have missed this one. There's another bearish engulfing here. Do you see that? Telling you the market wants to go down. Place your stop loss above your bearish engulfing. Target 1 to 2. You would have made money with that. Okay, so I didn't see the bearish engulfing right there. All right, so basically that's how you just continue doing it. It's something that works, because it works both in, for uptrends, downtrends. You can do it in the lower levels. I can do it in the upper levels. So you always find trades. If I want to do for lower levels now, this is my latest liquidity. It got taken out by this red candle. So I'll wait to see if I have any candlestick pattern. This is looking like a doji, but most people would have missed it. Okay, and it's, if you took that as a candlestick pattern, definitely you would have entered this trade and you would have made money in the upwards direction. But let's say you didn't consider it a candlestick pattern telling you that market wants to move up. So this level then becomes your latest liquidity level right here. Okay, that becomes your latest liquidity level. And guess what? It got taken out around here. So this candle took it out. Then we start looking to see if we can find a candlestick pattern showing us the market wants to go up. This is a bullish engulfing right here. That's a bullish engulfing. But if you enter the trade, you would have just made a very small amount of money in the upward direction before markets will just reverse. Okay, so under this one, this is the latest liquidity level now. It got taken out right here, and you have an hammer. So definitely this is a very perfect trade. Okay, took out liquidity, gave us a candlestick pattern, which is an hammer. You can see the hammer right here. You enter after the hammer. What do you have? Upwards movements, stop loss below the swing of the hammer, and you would have made money in that direction. In the same sense, look at this. This is a liquidity level right here. I just marked this one. Okay, that's the liquidity level, and it got taken out by this candles that moved up. Okay, so now that it got taken out, you'll be looking for candlestick pattern that will show us that market wants to move downwards, and we have it right here. This is a candlestick pattern. This is a reverse hammer. Okay, that's a blue reverse hammer. You could enter after that, or you wait for some confirmation, maybe a red candle. And what do you have here? You have a red candle, you have a big red candle. You would have entered and made money in the downwards direction. So do a back test of this strategy on your own. Try to rewatch the video if you don't understand it. You can ask me questions also. I know it's a little bit complex, but I don't think this particular strategy is not beginner friendly. Okay, it's for those that are already trading. You already know what liquidity is. Okay, you're not trying to understand liquidity, you understand what liquidity is already. So you can now go and try this out. Okay, back test it on your own and let me know what you think. Okay, all right, so basically, if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.